The euro strengthened after a weekend news report that said the ECB was weighing a plan to buy government bonds if yields moved above a certain level relative to German debt. CME Group is planning to launch a London-based derivatives exchange. I'm Lindsay Bell, and the morning call starts right now.
Good morning, I'm Scott Rudler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the morning call. This week's going to be a light week as far as economic data goes, but we have some important meetings in Europe that we're going to hear from, and then also the Fed minutes later this week. Scott, what do you have your eyes on?
I'm going to see how we handle the old highs, because sometimes when you get to previous highs, you see some selling. You could either like push through and ignite and get another short covering round, or you push through and fail, which gives you a bit of a rest. So for me, I'm just going to try not to fall asleep behind the wheel. I've talked to a lot of my traders. I've tried to keep them on the right side of the market. The last 3 weeks, the action has been unbelievable. We've been following two trends. We've been following a macro trend that's been in place since the October 4th lows of 2 years ago, let alone the June 4th lows of this year, as well as this accelerated uptrend that we've been riding the last 2 weeks, where even momentum traders have been able to hold multiple positions because we really haven't had been tested whatsoever.
Yeah, it has been a great ride, but what are you seeing in the charts? Let's take a deeper look there.
Well, as a fast money type trader, I could look at both, and I could focus on the accelerated uptrend to see if it changes. So if you go to the chart, it all depends on what you're looking at and how quickly you maneuver and how many trades you do in a month. Here's the low in June 4th. Since then, you've had two different uptrends as we maneuvered for the past few months. First time it looked like we were going to change. It looked like you had to switch gears. That's when Monty came out and started jawboning, and we came right back up to the top end. This is really when you could have readjusted, got back involved as we held higher again, which was like the sixth higher low since that area. And then, you remember this day, the jobs day, on August 3rd when we ignited again. Then you had your 7-session tight range where individual stocks were performing well. And now look where we are. Here's the high of Friday, 14.18. Here is 14.22. I think if you take a close look here, what I'm going to see is I want to make sure that this accelerated uptrend that started right here stays intact. And I'm going to try and stay with my multiple positions until this changes. So if we finally get a break and close below this, maybe for a cute short, I'll try and make some cash flow. Maybe we test a 21-day moving average like we've done a few times during the course of this, tactical action. But as of right now, we're still on our way up. Guys are still getting squeezed, and the action's still the same way. So until we see some type of change or some type of composure change, stick with multiple positions, but make sure you have a hedge on in the spiders or a hedge on with the Qs. I don't think the VIX is a proper hedge, but just make sure you have something just in case the rug gets pulled, and don't chase any excitement, and don't get overly giddy, because at this point, I think Friday, a lot of traders in Apple started getting giddy. A lot of guys were starting to high five, and once you see the high fives happening, you got to, just make sure your hands are on the wheel and you're not, out the window going, woohoo, time to go to the beach.
Well, in the sector spotlight, you mentioned Apple in the tech space. High beta tech stocks have done really well this year. On Friday, a lot of them hitting new highs. So let's take a look at Apple first up. They hit a new high. They're now trading above their April highs. This is a stock that you've been involved in for the last 3 weeks. So where do you see it going forward? How are you playing? What's your game plan?
I've been involved in this stock my entire career, but the last 3 weeks, it's actually been a very easy hold. People say, oh, how do you hold Apple? It's a crazy stock. Sometimes, methodically, it works out very well, and in the past 2 weeks, it's been one of those methodical trades. Every time frame has been rewarded. This morning at 6:50, any investor at any time long this stock coming in today is in profits. So equity investing works if you pick the right stock. But anyway, more recently, you take a look here, ever since they missed on earnings, came into support, held lower. This is when the stock got back in motion and traded above this 580.80. 3-day move to the upper area of resistance. This is when I got involved for my swing long, right around here, when we finally first had our first pause. So this is tier 1 buy, here's your tier 2. A lot of guys got back to tier 1, including me, as it rested above this area. Then once it cleared this area of a 624, that was another buy price. Back to tier 2, nice little push up, a little bit of a tail here, back to tier 1, flag sideways, and then when it traded above, you had 638 pre-market Friday, then you had 644, which is a 52-week high, closed strong. Good book says stay with your swing trade, stay with your momentum trade. I'm not exactly sure where it is right now, but this morning I sold a little bit above 651, but I'm still in both accounts. I think as long as it stays above this 644, so draw that line, I think a lot of short-term guys will hold. If it doesn't hold 644, people will say, oh, it broke through the highs and it failed. So then maybe we see a move down to the 8-day moving average, which it seems to like hovering this entire way. So I will watch it close, talk about it, I'm sure, about 150 times today.
You have every right to. Well, Google's another stock. It's had an impressive run over the last 2 months. They hit a new high on Friday. Could we expect to see some consolidation up here? Where do you see the stock going?
This stock came into the year with a lot to prove. It missed 2 quarters and had faulty action, but institutions never gave up on it. It only went below its 200-day for a small period of time, and then it reclaimed its 200-day. And then this quarter, if you weren't in it, it gave you multiple areas to get in, multiple tight areas, which is what I talked about technically and tactically to put back a position on or add to a position. And then after this quarter finally gapped up and it held, you saw some commitment. You take a look at the chart. Last 2 times, this was the first quarter of the year, gapped down into support, went below the 200-day, but came back above, held support, tried to go back up. This was the 2 quarters ago, came in. People didn't like what they had to say, needed more time to consolidate, came back down to support. Then finally, here was this earnings report. Gapped above the 200-day, stayed there. You look a little bit closer here on the price point sheet off the charts. We talked about 620 as your new entry. So if you got involved right here, you're doing pretty well. You're up about, 57 points. So anyway, you had another move to the upside, went sideways, been hovering along the 8-day this entire time. This was a nice tactical entry that a lot of guys on my floor, including me, took advantage of when it went above this 649 to 650. Nice 2-day move, and ever since, still going higher. You look at your monthly chart of Google, it looks unbelievable. Stock put in its historic high back in 2007 at 747. This is when all they had is search. It's about 5 years later and 5 new businesses later that are actually making money looking good. Here is your first start on the monthly chart. It now, at this point, is above 670. The longer it stays above 670, I do think at some point we see at least 700 this year, at least. And then there's a small chance that we take out 747 before Christmas. And if it's not before Christmas, I don't think it's going to be too far after.
That's good to know. eBay, they've reached a new high also on Friday. Last week we got same-store sales number for the month of July that were the best ever for the company. There's rumors also out there that they're going to spin off their PayPal unit. I'm not so sure that's true, but this is a stock that Stephanie Link at Action Alerts Plus owns, but she's been kind of winding down her position, taking profits given the run and the macro environment. They do have some exposure to Europe.
Okay, well, you're allowed to book profits. And that's what everyone says. Everyone's like, well, there's low volume, it's August, and the bulls are going to get theirs. But you know what? Unless somebody goes and looks at and follow Stephanie to the bank and says, okay, you know what? I'm going to hold you up, or go to the clearing agent where you have the Action Alert Plus portfolio. If you book some profits, you look at this chart, it's hard for them to take it away from you, right? Here is a tactical new high. It's been a great trader ever since, a few quarters back. Look at this gap up. Consolidation, I remember this day, nice 2-day momentum trade for traders like us. Then it came in, tested support, another nice gap up this quarter on earnings. Since then, it's actually moved even a little bit better. Recently, hugging the 8-day. Then you had a nice breakout trade above 46.05 for momentum, guys. So at this point, if you're an investor, you're doing well with eBay. If you're an intermediate portfolio manager, you're doing well. And as a trader, you're getting these nice 2-day trades, 1, 2, 1, 2. And again, if you trade them and trail them, there's nothing a bear could do to take your money away as long as you put some in the bank and you try and stay with some.
Now, Amazon, they're a couple points away from their all-time high. I think it broke above a buy level of 238 last week. So what's the plan now? This
one, it doesn't seem to have the power yet of an Apple or of a Google, and I don't love it as a story, the valuation-wise. So that's why I'm a lot quicker here. I feel like every time I make money, I feel like I stole something in Amazon, and I try and move on. It's had 2 nice price points. You look here. First one was on earnings day when it accelerated through this downtrend. Remember, we talked 228 to 230. Quick move up, then it started to go sideways. This was the day that we entered. We talked about entering when we finally had some strength. We tweeted all over the place when we started buying it, I believe, around 236. And then you had another nice cash flow trade above 238, as it eclipsed through this 240, and now it's just hovering. I would say for momentum guys that are still long this, as long as it stays above 238, they're not going to have any kind of stress or anxiety. It could also test the 8-day, which is a 236. So I would say if you're trailing this one and owning it, as long as it stays and closes above 236, stay the course. And this one also, if this move continues, look how close it is to the all-time highs. But again, big moves, so just trade them and trail them.
Right, and then Broadcom, this is a stock that's had a sharp run since July. It's got great exposure to the industry leaders like Apple, Samsung, and Cisco. The product cycle is really strong. It's going to help lead to industry-leading earnings and revenues growth. This is one Stephanie owns. It's a core position for the portfolio for her. Although it's trading above all of its moving averages, I think she'd wait for a pullback to get back into it as a long-term investor.
Well, it seems like recently this is one you have to buy in the dip. Anytime it starts to get going, it falters. So as long as you continue to buy the dip, and I know every time she's been on, it always looks bad, and she's like, oh, I'm buying it here. I'm like, oh, yeah, it looks bad here, but every time it's looked bad is when it went. And then finally, it technically got better. So you had both worlds colliding, where the fundamentals buying the whole and then acting a little bit better. At this point, it is above the moving averages. It is acting better. You don't want to chase it just because it's acting a little bit better. You take a look here, you'll see the chart. It is above the 200-day. It just had a nice wide range bar to clear resistance here, last week. So at this particular point, I would say if you're looking for an entry, this too is riding its 8-day. Wait for 35.04. I think that you don't have to run and chase it, but overall, ever since this gap up, it's been slowly, following this uptrend. So as long as this uptrend since, July 25th stays intact, I think that you're going to see a methodical move to the upside, and it's worth being one of your positions in your portfolio. As a trader, I don't think someone's going to be trading Broadcom all day long, like you could trade Apple and Google and some of the big boys, but if you're putting money to work, this is something you could have as a side position if you're holding multiples with a hedge.
Well, we're going to take a quick break and get back into it with some earnings that we're going to see this week.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission. 2 free tickets. Come down and expect to have a great time.
Welcome back. We're going to get into some earnings reports that we're going to see this week. First up, American Eagle Outfitters will get their numbers early Wednesday morning. Analysts are bullish on this stock, and they've got more bullish going into the quarter. The stock's trading above all of its moving averages. Where could the next breakout be in this stock?
This is the type of stock that's being priced for a good report. It's not in the down in the dumps. It's not oversold. This is something that's been moving well. So let's hope that they deliver for what investors and analysts want. For me, I haven't been taking stocks into earnings. I've been trading them after. It's been a lot less risk and a lot actually more reward without having to worry about getting sideswiped. If you look at the chart of this stock, investors are pretty complacent here. Last gap up, filled it, which isn't great, but it's held the 50-day. Then it started to ride the 8 and 21-day. It's now a stone throw away from these highs. If earnings come out good and they raise guidance, there you go. Here's your level. This is it right here. Okay, this is 21.53. I have no color on earnings, and I don't even know. I have no kids that shop there, so I haven't seen a store. But anyway, it's at the highs. It has to beat and guide up in order to be sustained. If you don't hear a beat or a guide up, it could be in for some trouble.
We've got Best Buy, another retailer that's going to be reporting earnings tomorrow morning. I think investors here are going to be looking to hear how the turnaround story is going there. The New York Times came out with an article saying that they could also potentially announce a new CEO by tomorrow morning. This stock got a nice pop early in August when founder the founder.
Who cares who he is?
Yeah, the founder put a takeover bid in for the company early in August at $24 to $26. We also saw a news article out this morning that said he's no longer going to be conducting due diligence, but I think this story is going to continue to play on. We'll see what happens. Can the stock get above this $20, though, up to that $24 to $26 without a bid?
I think the board members should read about what happened with Yahoo when they were like quabbling over 33 or 36, and now it can't get out of its way at 15, 16. So at this point, stock's down a little bit this morning. I think shareholders want to take over. I don't think they care if it's 30 or 28. I think that would be fine. 26 might not have been enough for them, but let's see how happy they are if the earnings report doesn't come out good and they get a new CEO, and all of a sudden if they wait 6 months to 12 months for a turnaround, you're talking a $15, $16 stock. So at this particular point, I don't think investors are getting what they want. Even if there's a good report tomorrow, I don't know. I just think there's easier things to play out there. At this point, you look at the chart, it's just gross, battered, and bruised. I know we did some kind of option strategy on Bloomberg, which a few different times it made sense because we did $20 straight calls for August, and then a few times you gapped up above 23, 24. At this point, I wouldn't be long the equity. I just think there's too much risk there. If you want to be involved with in the money calls, so at least your risk is premium paid.
Yeah, exactly. We've got a few PC makers that are going to be reporting earnings, Dell and HP, both this week. It's expected to be a weaker quarter for both names. We're seeing more people switch to mobile and the iPad and different things like that. Dell up first. They've been consolidating at lower lows. What do you expect from this stock? Much at all? If anything.
This is like near and dear to me. When I started in the business in the 90s, this was the best stock to trade. It was like the go-go Dell, always making highs, always splitting. And they just really never caught up. They did the direct model, which was first, and they did well. And since then, they've tried to do some Me Too type of products that haven't gone off real well. You look at the stock, it's like depressing. This is, I guess, was the last earnings quarter, gap down. It's been consolidating, so there's, I guess, a new level of buyers here between 10 and 12. So just I think if they meet, you're going to get a trade here. I'm not going to go into it long, but if it could get above this 13.10, I do think you can get some kind of gap fill. You saw Cisco reborn a bit, from the lower levels, but it's not the same type of industry or company, obviously. But at this point, you have, what is this, 4 months of lower level trading here. At this point, I will see how it trades after hours. I think you have to be a big time Dell fan, in it forever, in order to own this into earnings, because typically weak stocks become weaker, and it hasn't filled this gap, so nobody's thinking how on sale this is. So, and I don't really see it. I don't see it. I know. So, we have some Dell computers in our trading office, but I don't know anyone going out and buying a Dell laptop. I haven't seen one in anyone's house in forever. And at this point, the people said it was like the catch-up play in some countries that are a little less industrialized because they're cheaper. But you can get the Samsung, you can get tablets. I don't know. I wouldn't be there.
Well, so we get Dell on Tuesday. We'll get HP on Wednesday. They've got a turnaround story that's supposed to take place in 3 to 5 years. We heard last week that they're writing down their technology services business by $8 billion. They're laying off people. The stock's been in an ascending channel since June. It's not much better, right?
Not much better. It really is. I think they are a little bit more diversified somewhat than a Dell. And I don't know, just both of them have been where money's been left to go pasture and die. Unfortunately, if that's you, it is what it is. You have an old name and you thought you can make money there, but at this point, we'll see. They're both beaten up enough where potentially, if the market wants to continue to rally, they're going to go with some liquid names that maybe they come out with a dividend to pay you to hold it since the stock doesn't appreciate. If you look at the chart here, if you want to know levels, here's your level. It has to get above this 2007 in order to continue whatsoever off these lows. Support-wise, you have about 19. So yeah, this is a little bit more off the lows. The chart doesn't look as broken as Dell. But I would think that if you're an HPQ investor, you'd be lucky if you see 23, 26 this year.
All right, let's get into some quick hits with some more exciting stocks.
Yes.
Facebook up first. The lockup expired last week. It's kind of weak.
Yeah.
Hitting lows.
This one, it's just a price point type trade. And I think we were Bloomberg on Wednesday, went over a strategy, like, what do you think? Is 20 enough for a bounce, or does it break 1980? I was like, I have no idea. It could be cheap from 38 to 36, but the valuation is still real high. What I would do as a trader, you look at 1980, 22.5. I'm not going to pick a side. What you should do is a straddle. So they bought, I think it was buy the 21 call, sell the 23s, buy the 20 puts, sell the 19s. The net cost was 70 cents. It did hit 19 on Friday. People were tweeting at me saying I'm closing it out. They made 30% in 3 sessions. Okay, not a blockbuster option trade, but at least there's money there. You look at the chart now, nothing you can really say about it except for the last lower level here to trade against was this pivot, right? Here's your low of 1982, and then it tried to hold it, and then we broke below it. So you get out of the way if you're trying to trade it. Same way it did right here when it broke below here. And the same way, remember, we had the straddle to potentially buy it, but as soon as it breaks a level, you get out of the way. You don't have an opinion. When it broke 30.55, this was your out. Then when it broke this little bear flag, here's your out, and then, once it traded below the lows here on earnings, then even intraday you could short it or overnight. But anyway, here it is. This is the pivot right now, 19 bucks, below 19. Don't catch a falling knife. I guess we'll have to wait for some other type of pivot to form here. But as of right now, there's a lot of pressure on this stock. And just real quickly to say LinkedIn, just because, it too came out with decent earnings 3 quarters in a row, and the social, networking stocks still get absolutely no not demand or respect, whatever. 126 is a level here. If it breaks that level, I would just sell it and wait for another, pattern, and then make sure it holds a 200-day. The stock is trying to do everything it can to hold up. And, if you're committed to it, stay with it. As a trader, I don't like the fact that it hasn't had any follow-through after decent earnings again. So watch this pivot right there.
Caterpillar, it's starting to gain some power here. Friday, it came out with dealer sales that were better than expected. Can it reclaim its 100-day?
Yeah, I think, people looking for things you own. I know in the low 80s we were talking about it. I think Stephanie was talking about it. It's when everyone started downgrading it, and obviously when everyone starts downgrading it after a move from, it was as high as, 110 or so. So at this point, I think it's a lower level trade. You look at it, take a look at the chart. I don't think it's going to be anything huge. It's acting better than Deere, obviously. It's had a decent move off the low. It's above the moving averages. Here's your 200-day moving average. It could be a stock you're holding if you have multiple positions, but if you're just trying to trade it, not really doing so well. So at this point, it did close in the highs on Friday, so it does have some room if it wants to continue. But again, here's your ascending channel, and stay with it as long as it stays intact, because ascending channels, when they break, they get correction type, or correction comes in. So just not a leader this year, and there's so many easier things to trade.
Yeah, well, that's all we have time for. So.
Oh, we're done?
Yeah, we're done. Right. So those are the stocks and the sectors and the levels on the S&P that we're looking at. Be sure to check in at the end of the day with Scott and the T3 Live team for the daily recap.